Is Fiverr stock the best recession-proof stock? What's up, everybody? Doriso here. Thanks for tuning in for episode 16. In this episode, I'll be going over Fiverr stock, which I think could potentially be one of the best recession-proof stocks out there in 2020, especially since we are seeing a lot of bear market and recession headlines with the media talking about the coronavirus, as well as the growing debt in the United States. I'll break down a few metrics that I focus on from the recent earnings release from Fiverr International. The metrics are key to my bull thesis. To end, I'll provide a quick portfolio update as I've been doing in all of my episodes so far. You'll notice I did make some recent purchases from last episode, episode 15. I'll also disclose one of my research techniques that not a lot of beginner investors are aware of. I use the research technique for small cap and mid cap stocks like Fiverr, FVRR, as well as Penn National Gaming, PENN, which are the two holdings in my YouTube portfolio. Let's get straight to it. Have you seen the headlines going around online and even offline with the media discussing the coronavirus outbreak overseas? Well, as you all know, I apply social awareness online and offline each and every day, incorporating data into my bull thesis for all of my holdings and investments. As you see, my portfolio is currently valued over $1,800 at the time of this recording. The market sold off yesterday and investors saw their stock accounts go down big time due to the recent update on the coronavirus. The virus appears to have spread to Italy, and more cases around the world are beginning to come up. Headlines include words like outbreak, panic, sell-off, and even quotes like, "Is this the beginning of the next recession?" As I was getting some cardio in during my morning workout, 3 days on and 1 day off for anyone wanting to know my lifting schedule, I turned on CNBC and saw a quick interview with one of the greatest investors of all time based on past performance, Mr. Warren Buffett. I'm sure you heard of him. Warren, he occasionally makes appearances on TV throughout the year. As a long-term investor myself, my investment philosophy is very similar to Warren's approach. He said he certainly won't be selling stocks during the decline. I will be doing the same with my holdings. No need to sell with early signs of panic. Stay the course. This is a very difficult mindset to have, especially when you open up your Robinhood app or M1 Finance stock account and you see the color red all over the place and your stock value is down hundreds, thousands, tens of thousands, and maybe if you're at Warren's level, billions in losses in a single day. This is why investing in the stock market is not for everybody. If you get emotional and fall into the trap of getting scared of losing all your money, then you should not be investing in individual stocks. Remember, there's a company behind every single ticker on your phone. Ticker AAPL, that's Apple. Closed down minus 4.75% as I look at my phone at the time of this recording. That's one of Warren's largest holdings in Berkshire Hathaway. A reasonable conclusion that Apple stock fell over 4% is because Apple has factories in China where employees build the parts to make iPhones and other Apple products. Using logic, if factories are shut down or employees in China can't work, then guess what? Apple can't sell product that they don't have, right? Basic theory of supply and demand, economics 101. Those college business courses sure do come in handy. It would be a safe conclusion that Apple's revenues would fall for the next earnings release and potentially future quarters if the coronavirus continues to spread and businesses stay closed. And that brings me to my next topic in reference to earnings. Fiverr stock. Fiverr International reported earnings last week. I can make this episode about probably 10 hours long, highlighting the things I like and don't like about Fiverr's earnings and financials, which could be found on their investor relations website. Yes, there are financial statements for the stock ticker you may have bought on your phone recently. That's the downfall of having access to the stock market in your hands. I'm seeing many individuals, especially beginners, just clicking a button to buy a stock that they think will go up. There's much more to investing in the stock market than just clicking a button. When do you know when to buy? When do you know when to sell? Should I diversify my holdings? What are my short-term and long-term plans with my hard-earned money that I have invested? Many, many questions. Since there are plenty of episodes in the pipeline to go over tons of stock market topics, I'll go over a quick breakdown of a couple of my notes based on Fiverr's Q4 and full year 2019 results. For any beginners out there, Q4 means quarter four, which are the last 3 months in the year, October, November, and December. Between me and you, I normally print out all of the financials after an earnings announcement and then circle and add my personal notes to the most important metrics that I think add or take away from my long-term bull thesis. I only have 2 holdings at this time in my YouTube portfolio. Imagine having 50 plus companies in your portfolio. Good luck allocating time to review the financials for all your companies. Diversification will be another topic to go over. Long story short, I don't believe you need tons and tons of holdings in a portfolio. If I have a bull thesis in a very few companies that I think will make me money, why do I need to have 50 or even more companies to spread out my total return? If I was to go that route, then I wouldn't be investing in individual stocks. I'd probably just invest in a broad index fund like the S&P 500 and call it a day. I don't want to match the S&P 500's return. I want to beat it every single year. That is why I've been investing in individual stocks for the past 10 years. This mindset may be different from your mindset. Luckily, I don't have to convince you to do anything. I'm just a regular person looking to grow my stock portfolios each and every year. Everyone has their own method to multiplying their money. Let's get straight to it. Number 1, revenues. As with any growth company, I always want to make sure the top line is consistently showing signs of growth. Fiverr reported $29.5 million in revenue for Q4 of 2019. The way my mind works, I like to break it down to monthly and daily numbers. This breaks down to an estimated $9.8 million each month and around $325,000 in revenue every single day if you divide it by 90 days for a quarter, which is 3 months. Imagine personally building a website that brought in $325,000 in revenues every single day. Did you listen to my last episode, episode 15? I referenced a story going over this type of business. Maybe it's a Shopify store you built and branded yourself, and tons of people are buying your products. Just a thought. Back to Fiverr. Next, we have a year-over-year revenue increase of 43%. This is another important metric I look at. How did the company perform this time last year? The higher the percentage, the better, in my opinion, especially for a growth stock like Fiverr. Revenue during the entire year of 2019 came in at around $107 million, which was a 42% increase from 2018. Divide that number down by 12 months, you have $8.925 million. Comparing $8.925 million versus the $9.8 million monthly breakdown from Q4's revenue line shows me that the monthly growth is on a trajectory up. Keep in mind, there is a bit of seasonality built into the Q4 for any company. Think about it. How many major holidays are in Q4? That's months October, November, and December, right? You have Halloween, Thanksgiving, Christmas, New Year's, the list goes on. Are people in a more happy mood during this season? In my opinion, that's a yes. Does that correlate to more spending, especially online? I think there are metrics we could dig up online to support that statement. How about this one? Q4 is the last quarter in the year, right? What do you think companies do at the end of the year? They review their financials and sometimes allocate a large marketing budget if they need to build their expenses prior to the year ending. Year-end numbers are always important for accounting and tax purposes. This may be getting a bit complicated for some beginners out there. That is why I'm trying to stay as basic as possible early on for these episodes. I could continue to go on about seasonality and a company's strategy for taxes, but that would get a bit boring. Just Google Amazon and corporate taxes. That's an interesting read. For this episode, let's stick with some more basics. I covered a simple revenue called a top line metric, right? What the company brings in. Well, let's go over another one that I focus on myself, net gain or net loss, a bottom line metric. For Fiverr, the net loss for Q4 was a loss of $7.4 million, which breaks down to a loss of 23 cents per share. What this means is that Fiverr made $29.5 million, or let's say 29.531 to be more precise. That number is found on the consolidated statements of operations. Yes, all publicly traded companies have these types of financials to review. A stock is not just a ticker on your smartphone. Remember, the stock price is backed by an actual company operating in the real world. In this case, it's a website called Fiverr.com. You'll notice Fiverr has many operating expenses to keep Fiverr.com up and running each day. Some expenses include research and development, trying to figure out new ways to grow the business, right? Sales and marketing. Like with any Shopify store out there, you need to get high volumes of traffic. Think Google ad spend, right? People run ads here on YouTube. That's considered a marketing budget. The expense list goes on and on as you go down the page. Near the bottom, you'll see net loss. That's an important metric I look at. I can get into my reasoning, but that would take quite some time. Keep it basic, Doriso, right? So the net loss means after making $29.531 million top line revenue, right? Top line. Fiverr lost $7.439 million for the quarter. So Doriso, you're telling me almost $30 million came in and Fiverr didn't even make money at the end of the quarter? Why would I want to invest in a company that loses money, in this case, over $7 million each quarter? The company's market cap is around $1 billion. A $1 billion market cap for a company that loses money? All great points, my friend. Unfortunately, it is very difficult to explain today's valuation versus the future valuation of Fiverr stock in just one episode or even 100 episodes for that matter. I've been learning about the stock market for 15 years now and only started investing 10 years ago, which is when I felt I knew exactly what I was investing in for all my stock holdings. I will say this. I do believe Fiverr is on a path to profitability based on the recent earnings announcement. My goal is to not convince you, but to entertain and teach some of the techniques I use to grow my stock accounts. As you see on the screen, my portfolio is up only $233 since starting this YouTube channel a few weeks ago. If you do some quick math, $1,883 in the current value section minus the total gain of $233 is $1,650. That's the amount I deposited so far. If you've been following along, I finally deposited a little more than $100 per episode from episode 15's portfolio update. About $250 was deposited to take advantage of the discounts of the corona news. As I mention always, discounts are welcomed in my opinion, especially for my two holdings. Do I feel Fiverr is in an industry that can continue to grow during a recession or because of the corona news? At this time, I do, and that's my opinion, my personal opinion, right? Let's use logic once more. What happens during a recession? Long story short, people eventually lose their jobs because companies need to make budget cuts to stay in business. People lose their jobs. What do they do to support their families before finding a new job? That is, if they could find a new job. That's right. They need to bring in money. Well, Fiverr.com helps people make money online. It's called freelance work. Yeah, Doriso, I get it. But who's going to buy freelance work during a recession? Well, I think if more and more companies go out of business during a recession, then the large companies that are still in business need to find cost-effective ways to outsource freelance work. Guess what? Rather than throwing a couple $100,000 to a marketing company that might even be going out of business, how about we pay some talented individuals on Fiverr.com for much, much less than $100,000, maybe only a couple thousand, right? These are decisions that many CEOs will need to make during tough times in a recession. Just some of my thoughts. Only time will tell if these thoughts are factual during the next recession, Fortunately, I don't have the crystal ball on that. Now, as promised, back to my portfolio for the research trick I use for small to mid cap stocks like Penn National Gaming and Fiverr International. You'll notice there's a lot less information and articles on these companies compared to the big players like Apple and Amazon, which have more analysts and writers covering these companies on a daily basis. A research technique I use is using Twitter and typing the $sign, then the ticker symbol to find out what people are saying and to get updated information on analyst upgrades. So for Penn, you type in the symbol, PEN. There's some interesting information to curate throughout the weeks and months that I'm always keeping an eye on. Hopefully that trick helps you gather your own research for your personal stock portfolio, especially if you're investing in small cap to mid cap stocks. By the way, look out for Dave Portnoy and Barstool Sports to ring that closing bell on Thursday. Will this bring in a bit of a buzz and raise the stock price higher? Time will tell. Portfolio is a little over $1,800. Current gain is about $233 at this time. I did add to both positions and now have 20 shares of Penn National Gaming and 30 shares of Fiverr International. Those new shares need to settle. These positions are still very, very small, and I have plans to continue to deposit more and more money into the portfolio. How high will it go? I guess you haven't caught on to my motto, from zero to infinity. We're just getting started. Make sure to tune in for the next episode to find out. Any signs of a pullback are welcomed in my opinion. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment purposes only. Maybe I'll see you again. We're on a mission from zero to infinity. Any questions about Fiverr International or Penn National Gaming, please leave in the comments below. I'd be glad to discuss that with you. So for this one, I'm out. Peace.